Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into the charts for Bitcoin, taking a look at what's been going on most recently and what I would expect to happen next. Now as I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check that out today. Okay guys, let's waste no more time though. Let's jump right down into this and take a look at what's been going on most recently here with Bitcoin. So we have Bitcoin here paired up with USDT. We're on the hourly chart and Binance is the data source. Now in yesterday's video we're talking about a potential leading diagonal and then a bounce to the upside. I still think the bounce is likely to happen here. However, I no longer think this is a leading diagonal. I actually just think it's a 5-wave drop. So let's go ahead and just show you what that looks like. Let's just clear off these Bollinger Bands, just get rid of that for a second, and we'll remove those 5 waves, right? So we end up with this pretty simple zigzag pattern over here, and just moving up into our 4th wave high. This came in at 21,888. What I'm going to do is I'm going to remove the zigzags now, and what I'm going to do is I'm going to mark this up as an ABC, so it's easier to kind of keep our eyes on it, right? So we know exactly what that was. Okay, so we have a 3-wave move, ABC, that is a zigzag, 535. Nonetheless, that's all done. We hit the high and then we started to pull back down. Now, one of the things that we were looking at and talking about yesterday is we needed to see the price move down lower than 19,770. And that just right now has happened. So in the last hour, we've seen this price pull back down lower than our dashed line here. This confirms that there is no more upward action here and we do not have an overextended 3rd wave, as I was talking about the other day, meaning that there is still now the potential for the drop to the downside. So let's go ahead and now mark this up, right? So I'm going to just remove those for a second. Okay, so we now know that we have dropped down here, so I can get rid of this dashed line at the top. That's irrelevant, and get rid of this one. Okay, perfect. Okay, so this was my expectations for the bounce. Okay, I still think we're going to bounce, and I'm going to show you why in a second. Okay, so I'm just going to move this over here for a sec, right? So we have this drop and we had a lot of overlap to start with. I think all of this is a single wave to the downside. So what I'm going to do is I'm going to mark this up as a wave 1 here, a wave 2 here, this being our wave 3, 4, and now we're finishing with 5. Okay, so I'm expecting reversal really soon. So let's actually grab this and see where this is going. Now we'll see whether or not we're hitting our expectations. So we're a little overextending here. Okay, so if we're overextending like this, then we should be looking at an alternative way of counting. So if I again take all of this up here to the top, grab it, move it over here, 618, basically we should come down to pretty much actually where I've got this 5th wave marked right now. So my expectations here are going to be somewhere in around about here at about 19,237. We just go ahead and change that to 37. Okay. So basically there's a couple of alternative ways of counting. Alternatively, again, from this we actually see a 5-wave drop, which I think we are looking for here. So we go 1, 2, 3 down here, 4, 5, like that. Okay, so we end up with that 5-wave drop here. Okay, so we're kind of looking out for that, and I think we've also kind of got a weird one right in here as well. 1, 2, 3, 4, and 5, like that. But up here in this wave 1, I think is really hard to spot. There might be something in there on a smaller time frame, but I think this will actually then mark the reversal point and the bounce to the upside, right? So we're targeting a little bit more to the downside and then a bounce. Now we take a look at the stochastic. You can see here on the hourly chart that we are oversold. On the 4-hourly chart, oversold. 8-hourly chart, oversold. Daily obviously has to come back down, but is not overbought. We can go back up as we had done previously. So again, indicating that we could just move up into our range. Now let's take a look at the typical wave 2s. Okay, so a wave 2 retracement, if we do come down to this low area just here, then we would be looking at moving up just ever so slightly higher here. Let me just grab hold of my range. So we're looking at 21,557, okay, on the higher side of that spectrum. Let me just do that. And on the lower side, we'll be looking at 21,061. Okay, so we'll put that in there as well. Okay, now I can just remove the fib and we have this. Okay, so now we're looking for a bit of a bounce to the upside. What I will actually do is I'm going to mark that back up here. Okay, we cannot cross this level. In order to make sure that we are staying in this structure to the downside, we want to make sure that we do not cross higher than 21,888. So that's important that we keep that dashed line just there. Okay, so we've got our low target, we've got our higher range at targets here between 21,061 and 21,557. So what I'm expecting is all of this is a wave 1 drop. Okay, this becomes a wave 2 bounce, and then we drop down in a really significant way again, probably just touching this area, we bounce up, and then we finish it off into our lower ranges. Okay, so that's kind of the expectations. Let me just move that back there. So that's the expectations here, right? That's kind of what we're looking for. We're looking for basically a 5-3-5-3-5. Now, on this note, if we'd have to move up in a pretty significant way. Let me just grab this, move this over to that higher end here. Yeah, so we'd be looking at trying to come down to this 1.618. If we take it from that lower side there, yeah, that actually puts us approximately around here. So just before we actually hit our low zones in there. And then if we do bounce up, we would be looking for a bounce of, let me just see. This is a lot of speculation here, guys, because this is not a guaranteed move or anything like that. We would look for about there. And then from here, we would look at about here. So our fifth wave would estimate at about 16,262. Okay, so what I've done here, guys, is I've kind of speculated that maybe we'll only reach 21,061. So the bounce is not as much as we would like it to be. We fall a little bit short. If that is the case, our wave 2 would end here. Our wave 3 should normally be about 1.618. Okay, so I've put that in there as a typical wave 3 move. And then we bounce up to a typical wave 4 retracement of 3.382 basically. It's a 0.382 retracement level, a 38.2% retracement level for wave 4, and then we pull back down to a 1.618 of the wave 4 movement, taking us down to 16,000. So a little bit of speculation there based on what we'd expect typically from a wave 2, 3, 4, and 5. So I'll tidy that up. I'll just remove these fibs. Okay, it is speculation. It does mean that we come into our little yellow box area of our fifth wave measurement here, but falling actually around the mid-range area, not really the lower end, more the higher end spectrum here. So just a little bit north of 16k. So one of the things that we've got to look out for is to make sure that we do not cross higher than 21,888. That would invalidate the structure to the downside here on this particular pattern. But being the fact that this could be a 5-wave drop, which I do think it is, basically, we would at least expect a zigzag at this point, so a 5-3-5, but confirmation of we are definitely in the correct structure would come in by dropping down lower than 17,622. But to be fair, by the time you're in these lower ranges, you should have a pretty good idea as to whether or not you've gone down to a 1.618 of the entire structure that you're kind of looking for. So looking pretty good from a Bitcoin perspective here. I'm still expecting to bounce. I do think that's happening. I actually thought it was going to happen a little bit earlier with the leading diagonal, but unfortunately that wasn't the case. So, you know, yeah, I still expect us to move back up. We should be able to take advantage of that situation and then obviously capitalize on the pullback to the downside. So yeah, for the most part, that's kind of what's going on there. Now let's just check that daily chart, right? Just bring this back down a little bit. And you can kind of see that we're reaching these kind of low ranges. If I bring up our Bitcoin here on our weekly chart from a BitStamp perspective, this is the one that has all of this other data in there across the years. And the reason that I want to bring this into play here is for a couple of reasons. One, if I bring in the Gaussian channel here, we can obviously see how the Gaussian channel's playing out. But we are really looking at this little area, right? So we moved down initially, we bounced up, and now we're looking to just pull us down into this bear market low and taking it down lower than the structure. Now, what's interesting, and the reason that we've got the fib on here is we have already bounced from a 1.382, and we want to drop down, but we want to avoid hitting 1.618. Not that I think it's going to happen, but it would put us into a potential weekly 5-wave structural move to the downside, and that would be pretty bad. There would be a significant bounce up and then another collapse to the downside, which, you know, for the most part, I wouldn't be too opposed to, but it would mean that we would have this kind of slightly longer bear market phase, but it would be a fantastic opportunity. So I'm not opposed to such an idea, but I think for most retail investors, they're probably kind of fed up and not wanting to necessarily see it come down to those lows. So we're watching out for that as well. We want to avoid that where possible. But it is definitely a possibility. So we want to kind of keep an eye on that. And what I mean, guys, is basically we have this 1, 2. If we drop down to about $14,500, that becomes a wave 3. We bounce up probably towards 22K and then drop down. And again, that next drop to the downside could take us, lower than $12,000. So there's huge opportunities in all of that, but I think most retail investors are probably going to want to avoid it. Just bear that in mind, but for the most part, the Gaussian channel is indicating pretty good things in the same way that we had seen it previously. The value is definitely here, and we've got a little bit longer to kind of wait, and I think really we are in a pretty good spot with Bitcoin's accumulation, altcoin accumulation, but do expect more pain, do expect more of a significant drop to come, but a relief bounce is due in my opinion, and I do think it is just around the corner. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.